And welcome back. Today I'm going to talk about the Greer Value Tool that I created using all the tools available in TradingView. Um, One of the things that I've struggled with over the years is trying to find good companies and trying to identify which are good companies to hold long term, to invest in long term versus ones that are just maybe hype for the day or something like that. And then on top of that, is when to determine when to actually is a good time to buy into it or even maybe take some profits. So what I came up with as I was looking through all the tools and stuff is here's an example of Microsoft, and as you can see, it's just a generic chart, and it's going up and it goes down and it goes up and it goes down and it just went up recently. So you just look at this and you're like, well, when is a good time to actually start to, is this a good company, number one? And number two is when's a good time to actually start to um, invest into it? So one of the things that I started adding was trying to figure out what are some critical values to look at to determine whether a stock is trending in the right direction. And so I added a few of these lines, and there's all kinds of lines going up and down. And as you can see here, I'm going to walk through a couple of these financial stats. So this one I think is very, very important. It's called diluted shares outstanding. And basically this shows you when a company is actually buying back their shares. So that means that the value, the shares that you hold as they buy back, there's less shares out there. That means that the value, you own more of the company when they start to buy back these shares. On the opposite, if you look at another stock like this, Tesla, where they're actually selling shares to the market. So as they're selling, they're basically, it's like the Fed printing more money. The value of the shares that you held as they're selling more shares to the market is not as valuable. So that's one key stat. The other one is book value. This is if the company was just going to actually, someone wanted to buy the company and looking at all their debts and their liabilities and their assets, and you can see, the value it would cost to buy the company. As you see, you want to see this going up and to the right as well, year over year. The last one is how much is the company generating cash, meaning that they're very healthy if they're generating cash. And the last one is that their operating margins are increasing as well. So, looking at all these lines and then going through each individual stock and trying to determine, whether it's good or bad or whatever, um, it's a lot of work. And you can just click through all kinds of different stocks that you have on your watch list, and you can see um, where they're at. But it takes some work, and you can categorize it and put it in. So what I did was I created a tool here called the Greer Value. And what this tool does, if you just add it as an indicator, add the Greer Value in here, and let's turn it on, you can see, boom, right away, I took all those statistics, the book value, and there's like a little tooltip about what each one is, or what it means, whether their revenue is increasing year over year, whether their income is increasing year over year, or whether they're buying back stocks. And as you can see here, 15 out of 20 years in Microsoft, out of the 20 years, 15 times the book value is increased. Free cash flow, 14 times out of the 20 years, the free cash flow is increased, and so on. So what I do is I just basically take all of these statistics, and you can see all of these are green, so that's positive. And then on top of it, I take all of them and get a value, which is this is 75% of the time out of all of these statistics that Microsoft is, increasing these financial statistics. So this is a very healthy company. Just looking at it right away, you can see, back in 2017, it was a 63, and it's gone up all the way, 73, 74. Now it's at 75, which is just anything over 50 is something that to look at. Now, if you look at something else, like one that's really popular, but you might want to know, Tesla is a good example of, I still like the stock. Doesn't mean that it's bad long term, but right now, from a company perspective, their free cash flow, they've only 4 out of 15 years has increased their free cash flows. Only 4 out of 15 years they've increased their operating margin. You can see that they've never bought back their shares. They're always selling shares into it, so they're diluting the shares. So that's interesting. Whereas you take something like a United Health, you can see it's very healthy, all green. And then there's mixes, like these have like maybe one or two. So here's an example of one that has got everything is positive except for their free cash flow. They're only 47% of the 19 years have they, increased their free cash flow. Not bad, maybe something you still might want to look at, something you can identify really quick. So with that being said, let's go back to the Microsoft example. Over these years, when would have been a good time to buy? And obviously, you can kind of look and tell that this would be a good time to buy, and this would be a good time to buy, and this right here. But you don't know the history. So what I use is I created another tool I've had for many years. It's called the Greer Buy Zone. And when the Greer Buy Zone turns red, that's when you want to, after you've analyzed the company as a good company and you want to get into it, this is a good example, and it just identifies right away, boom, this is a good time to buy. And just recently, Microsoft, you can see here, back here was like around this time frame. I noticed that it's been going up, it's been going up. When should I have bought it? And then I alerted my club members that on March 7th, I said, hey, Microsoft just entered in the buy zone. You might want to look at this. You might want to accumulate. You've been waiting all these years. Maybe it's a good time to jump into it. And as you can see, you could have been buying some Microsoft and made some good money. And then, right now we're in the sell zone, but you knew that it was a 75 Greer value. That's very strong. And it's in the buy zone, very strong. And so now I've categorized a couple of these. So here's some examples, which I'm not recommending these that you buy these, but this is interesting that Apple is a good example of one that's actually in the buy zone and it's got all green stats. It's a 67% Greer value. Um, Maybe it's something that you might want to look at. Chipotle is another one, 76%. This is 19 years worth of stats. They've been positive. It's in the buy zone. Google, this one's interesting. This is the Google when the Class C that got separated out. What's interesting is that in the last 11 years, they've been very, very healthy. But if you look at the Google, I have a Google here, which is the other share that's been around a little bit longer, 19 years, you can see that, the operating margins are a little bit lower and the diluted shares outstanding a little bit lower. So this one didn't, it's even though it's the same stock, it's just one has voting shares and one doesn't doesn't really mean anything left or right, but just wanted to show that that's why this is all green and the other one isn't. Honeywell is another one. It's a little bit out. It's in the limbo right now. HPE. Again, this 10 years, it's been around a lot longer. The HPQ is actually doesn't have all green. Lululemon, PG, and Ross. These are just some examples of that are all green and they're in the buy zone. Then I have some that are um, almost all green, but maybe there's one or two missing, like you can see here. This one, the operating margins is not as strong. American Express, the free cash flow is not as strong. So anyway, with that, using the tool of you know of this Greer value to identify what is a good company long term, and then using the Greer buy zone to determine when should you start accumulating this is something that I think is interesting to look at, and we would be open to any feedback from anybody what your thoughts are on this. Oh yeah, one last thing I want to say is there's some of these that are all green, but they're in the sell zone. Doesn't mean they're not good to buy, but it just means that, it's not, they're not precisely the best time. But just because it's not in the buy zone doesn't mean that you don't buy it. You might still, if you really like a company, like a Disney or JP Morgan or Oracle, these are all really strong companies. They have signal all green, but they're not in the buy zone yet. So something you might want to you can keep an eye on and then maybe jump into it when it does hit the buy zone. And that's it.